You're on the spotlight, Maher.
Oh, I am.
Yes.
Hello, everyone. Welcome to the Training with Krishak. I think this is number four, which wraps up the four sessions, and it's a pleasure and an honor to introduce such an amazing young man, individual who has been my personal instructor and taught me everything I know on the Forex market. And just a few quick words before we get started. I appreciate everybody's on this call, and for those of you that are on this call, no, I'd like to go ahead and mention our Mindset Matters sessions next week. We're starting up with Shazia and I on July the 8th, Wednesday. So make sure that you tune into that and you invite everyone that you know, your team members, your QBN members, your family members. It's for anyone, whether you're in QBN or not. The Mindset Matters is an amazing series, and we'll have 8 weeks. Back to Krishak. Let's go ahead and add him to the spotlight. I'm going to add him here. What an amazing individual we have here. Very young, but very wise. Great, great trader. But trading is one thing. Knowing how to trade is a great skill, but knowing how to teach is a completely another level. I know that from martial arts. I trained martial arts, but when I found my teacher that knew how to teach, that's when I stayed, and I trained with him for 30 years. Krishak and I think we'll be together for more than 30 years. Gonna watch him grow up and get married and have kids one day.
Course.
Inshallah, inshallah. Well, very good. I'm going to hand it off to him. Krishak is an amazing instructor, teaches with ease, confidence, patience, clarity, all the qualities that an instructor is needing to make things easy for the student. Forex is a complex market, lots of moving parts, fundamental analysis, technical analysis, emotional analysis, you name it. Forex has a lot of components. And who best to teach us than our very own Krishak? Krishak, the floor is yours. Welcome to QBN, and thank you for being here.
Hello, everyone. I appreciate you, sir, for this good introduction. Again, it's always an honor being a part of QBN and speaking to all the members of the QBN. And thank you for everybody for being on the call as well. This is the last session for the series of four again. So it's going to be a very interesting one. We have spoken a lot about technicals, fundamentals, psychology. This session is actually going to be a little different. It's going to be a power-packed session of fundamentals, technicals, psychology, and strategy. So it's going to be a really good session packed with everything that you need to build your strategy. So I'm just going to go ahead and share my screen. That way we could look at it together. Make sure to make notes from this session because this session will improve your trading a lot. So make sure you have a notebook and a pen handy to write notes, and feel free to take screenshots as well. And I assume the chat box is open for the questions as well. First, let's understand the pillars of trading. There are three pillars of trading. Fundamentals. One is the fundamental. Um, uh, we have fundamental, then we have technical, and we have psychology, right? These are the three pillars, and this is what we're going to discuss in this session, the three pillars. Fundamentals is, of course, news. So fundamentals will tell you why are the markets moving? Why are the markets moving? Why are the markets moving the way they are moving? And fundamentals usually give us the why. So the direction is always set based on the fundamentals. If the dollar data is not coming good, if the dollar data is not in favor for the dollar, dollar goes down, gold goes up. This is what happens. So fundamentals will decide the direction of the market most of the time. Then comes what is fundamentals? News events, right? News events is called fundamentals. Next comes technicals. What is technicals? Technicals is reading the charts, analyzing the charts, reading the charts. So when you look at any technical analysis, You got to first understand that what is the technical all about? Um, what are the charts saying? Are the charts saying whether you look for a buy, whether you look for a sell? But you got to understand the overall direction of the market, overall direction of the market. So this is actually the blueprint that we are creating for everybody on this call, to how do you place a position? That is the goal of this session is I'm gonna help you understand how to place a position. By the end of the day, that's your goal. Your goal is to place a position and make money. And this is what the blueprint is all about. So the technical is on reading charts, right? You read charts, you understand the trend, you understand where the overall markets are going, what is the direction of the markets, and it tells you when to enter and how to enter the market, how to enter a position, when to enter a position. Psychology is mindset, how to survive. Psychology is mindset. How do you survive when you are in a position? How does your mind perform? How does your mind perform when you're in a trade? Are you emotionally attached to the position? When would you be emotionally attached to the trade is when you're over risking. When you're over risking, when your position size is too big, when you know that you have to play with smaller lot size, but now you're placing a lot size that is double your risk. So you're technically, instead of risking 500, you're risking $1,000, right? That is when you're emotionally attached to the trade. Never be emotionally attached to your position. Always detach from the position. Never be emotionally attached. Because the moment you are emotionally attached to the position, you now, even if you see a little bit of profits, you will book your profits. You will exit your position, meaning now you're risking 1,000 just to gain 100 from it, just to gain $100 from it. That is negative risk to reward. The reason why you would be sort of focusing on just exiting the trade midway is because your position size is too big. You're over risking. You're over risking a lot. So these are the three pillars. Once all these three pillars are aligned to what your trading strategy is, and that is going to be the next topic from here, is once your mindset fundamentally and technically, once you're aligned, you will make money in the markets. Everything should be aligned in the markets, right? And with that being said, this is how you will be planning your strategy is looking at the fundamentals. Is look at Forex Factory. Go to Forex Factory, read your fundamentals. Go to Financial Juice. Financial Juice is another news website that I recently found out. Financial Juice is a very, very, very good website. Uh, I know a lot of people must have heard about FX Street. I have been mentioning FX Street Forex Factory. Look at Financial Juice. Financial Juice is a really good website for anybody who's getting into trading because they release news events, news data within few seconds of the Fed announcing something. So you have first-hand information to fundamentals. For charts, we all know what to use, MyQFX, uh, TradingView, right? We all know that we will be using these platforms to place positions, to analyze the charts, to understand how the markets are moving. And psychology is the mindset. How to improve psychology? If anybody in the chat, again, feel free to unmute yourself. If anybody in the chat can help me understand, I know a lot of people do trade here on the call. Um, how do you manage psychology when you are trading? Anybody would like to answer that question?
Sure, I'd love to answer. I Psychology has to be when I trade in a peaceful, quiet environment when there's not a lot of noise and distraction around me. Not If I'd had a stressful day or distracted for any reason, I don't trade. I do a little bit of meditation before I trade. I do some deep breaths, get some oxygen flow in your air, free up your mind, and tell myself I'm going to be an amazing trader with positive affirmations. So that's how I prepare myself every time I trade. I make sure that I'm quiet, peaceful, and relaxed. So that's how I prepare. I don't know if anyone else wants to add anything else.
Well, I'll add that following on from what Maher has said, I look at the trends, look at the market, like Krishak said, look at all the what does the fundamentals show, and then decide. Don't go with my emotion. And if I feel that if I've made a loss, I'm not gonna fight back to get go back and get that win. I probably know it's not the right time. Leave it for a while, and then revert back later. And I think that's where we all go into that mode of attack. No attacking, analyze, step back, go back into meditation, my hair, like as he said, and then return. So yeah.
And take the losses. If I lose, I lose. I don't do revenge trading. Like I got to get it back. So take your losses and move on and reset is another one. And we talked about this last week on the psychology is when you hit your take profit, take the profit. Don't move the line up higher to be greedy.
Yeah.
Set your goals, and if you hit your 2-to-1 ratio and you got your profit, go ahead and take it. So control your emotions. Yeah.
Control. Then that's absolutely right. And again, I really like how people think now in terms of again from attending the sessions, from how me and Sir we have done our sessions as well. We keep talking on psychology, and Shazi and I have been doing sessions as well where we keep discussing about psychology as to how do we place trades, how do we place trades, what is the system, what is the system that we got to follow. And I would like to add to this is I know Said said that I'm paid to execute my system. You are absolutely right. And
Yeah.
I would like to add on to this is that I get paid to wait. The reason why I say I get paid to wait is because trading is 80% of waiting and 20% execution. This is what trading is all about. People take it the other way. People think trading is all about being in the front of the screen and placing buy and sells all the time, clicking buttons all the time. It's the other way around. It's 80% waiting for the markets to come to you. Let the markets come to you, right? Let the markets come to you. Don't go chasing the markets. Why people lose money is because most traders don't lose because of bad trades, by the way. They don't lose because of bad trades. They don't lose because of having a bad strategy. They lose because most traders lose because of mismanaging their good setups. What I mean by mismanaging their good setups is what Sir said is dropping the stop loss, extending, widening the stop loss, not taking the profits. This is mismanaging a really good setup. Is if the markets are giving an opportunity to make money, take that money. Let go of the position, right? You are making money, take the money and then move on to the next. Don't try to extend your stop loss. Don't try to be greedy and make more from just one position because there are n number of opportunities in the markets. And then take that, if you don't book your profits, if you don't exit the position, and if it goes the other way, now that becomes a bad trade suddenly, right? It suddenly becomes a bad trade because it did not go your way. When it was up there, you should have booked your profits.
Is it
This is called,
Krishak, is it correct in saying then if you have a strategy, stick to it. Don't gamble because when you move away from your strategy, you're actually taking the risk and gambling in a way because you're thinking, okay, let me just give it a go. What if, rather than sticking to your plan. And then that's a strategy, right? We can modify it slightly, but it's got to be strategic.
you're absolutely right, Shazia. You could modify it a little bit, but don't take it to the extreme, right? Where instead of making 400, now you're making 1,000, where you're expecting to make 1,000. That is taking it to the extreme that, hey, I'm just gonna, you know, widen my take profit out of nowhere. I'll be up $1,000 just in one day or just in one position. That happens once in blue moon, and I keep saying that never, don't always go for home runs. Go for singles, then go for doubles, and then you go for a home run. Home run does not happen in every position. Every position is not going to be a home run for you, right? You have to play singles and doubles first to 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 have that home run position. So when you have a good trade, don't mismanage good setups. Good setups are not supposed to be mismanaged. Take your profits. Take that small loss and then move on to the next trade. And that brings us to the next topic is executions. People are scared to execute. People are scared to execute. Why are you scared? Answer the when you ask this question to yourself, why are you scared to execute? Answer this question to yourself. Most of the people would say because I'm over risking, because it hit my stop loss. It hit my stop loss and I lost a lot more. Why did you lose a lot more? Because you were over risking. You did not trust your setup. You were over risking. You were expecting to make 1,000 just by risking $200. You were technically over risking. You were thinking that no, I'm gonna make everything back in just one position, right? This is where execution gets a bit dicey. Now you don't trust your setup. You know that your setup really works, but now you're not trusting your setup because you're over risking, you're over trading. It goes back to psychology. So whatever we discuss eventually goes back to psychology, saying that the markets are not doing good. The markets are doing what it needs to do. You got to sit and analyze how are you mentally prepared to trade? If you're mentally prepared to trade and if you're mentally aligned to technicals and fundamentals, you will make it in trading. But if you're not mentally aligned, if you're not mentally prepared, trading will not do any good in your life. In fact, it will just add more stress. So the first and foremost thing is mindset matters. That's what the next call is going to be about as well, right, Shasya?
Yeah, I think also sometimes you got to know, do you have is your environment and your situation suitable for scalping or not? Because often people go into a strategy which is not, they're not ready for that. Because when you're scalping, you need to be sat at the computer for a longer period of time, and then they get distracted because they're trying to do other things as well, and then it doesn't work. And I always believe all strategies work if you plan it correctly to make it work for yourself. So I think that's quite important for people to decide, what time do I have? How much can I block? And what type of trading strategy is going to suit me? Am I going to be a day trader? Am I then going to be a swing trader? Am I going to be a scalper? And then go with that and be consistent about it.
That's a very good point, yes. And choose what type of trader that you would like to be in. And that all starts from assessing as to what are your timings for. Are you a 9 to 5? Is somebody doing a 9 to 5? Do you own a business? Right? You always got to set a fixed time to trade. Again, if the markets are 24 hours, that does not mean the markets will move 24 hours. You got to set a fixed time to trade, right? And the fixed time comes from what exactly do you do in your day-to-day life, right? Make trading your part of the day. Don't make trading your whole day. Don't make trading your entire day. Make trading a part of your day. That's it. You don't need to trade for 7 hours a day, 8 hours a day. You can just be in front of the screen for 3 to 4 hours a day. 3 hours is more. I'm in front of the screen for 3 hours a day. That's it. The rest of the time, I'm doing something else, right? If I see a setup after I'm done trading, I don't take the setup because that is not my time to trade. That is my time to do something else. It can be doing sessions, it can be, going out, it can be doing anything that I like, right? So don't make trading your entire day. Make trading as a part of your day. And that brings us to the next topic as well, types of trading. Depending on how much time you have, decide what type of a trader you would like to be, as what Shadya said. Would you like to be a scalper? Would you like to be a day trader? Or would you like to be a swing trader? When I say swing trading, let's start with swing trading. Let's start with swing trading. Swing trading is the most profitable. I'm going to start off with that. Swing trading is going to be most profitable. Why do I say it's the most profitable? It's because you are focusing on capturing the larger momentum. You're focusing on capturing the bigger trend of the market. You're not focusing on small movements. You're focusing on a bigger picture. You're on a bigger trend. So when you focus on a bigger picture, bigger trend, you're now capturing the entire movement or significant amount in swing trading. You pay less commission to the broker. Why do you pay less commission to the broker? Because you take less trades. Less trades equals less stress. Less stress equals better trading. Your mind is crystal clear. Less trades, less stress, better trading. Your mind is now crystal clear in looking at opportunities and figuring out opportunities as to what opportunities do I see now, because you know that you only have 3 bullets for the week. Treat these opportunities as your bullets. You only have 3 shots for the week or 4 shots for the week. You have to utilize it in a wise way. You know that you will only use these shots, knowing that you have limited amount of bullets. You only have 4 bullets for the week. You're going to utilize this to the T, knowing that if this is my strategy, I will do this. If this does not happen, I will stay away from the markets, because the markets will give you the opportunity next week as well, the next month as well, after 6 months as well. So swing trading is the most profitable, where you focus on higher time frames. Day trading is in and out within the same day. Swing trading is something that you hold your positions, hold trades for a week or more, right? A few days, I would say a few days for a week or more than a week. Day trading is you're in and out within the same day. Take 1 or 2 trades a day. You don't need to take more than 1 or 2 trades a day, right? In day trading, you only have 2 bullets. You have 1 or 2 bullets for the day. And if you do not use those bullets, you don't make anything, but you don't lose anything as well. So you're preserving your capital, right? Day trading is something that I do. Swing trading is something that I do. I'm not a scalper, but we need to touch base on what scalping is. You're in and out within few minutes to seconds. Scalping is the most stressful thing, because now you're taking 10 to 20 trades a day. 10 to 20 trades a day means you're risking 10 to 20 times a day. This is what scalping is. The n number of times you place a position, the more you risk, right? If you place, let's assume that you take 10 trades a day, you're risking 10 times a day. If you take 2 trades a day, you're risking only twice a day. Keep in uh, Again, you have to keep a note of the brokerage as well. You have to keep a note of the amount of brokerage that you pay to the broker as well, because that adds up by the end of the month. That it eventually adds up to your profit and loss. I always say scalping is fast food of, you're correct. Scalping is actually the fast food of trading, right? Whereas it's dopamine. We always feel excited. We feel good when we are in a position. And we feel, no, I need to do this. But as a trader, 80% is waiting. We have to be on the sideline 80% of the time. So this is a part of your blueprint as well, that
And what
figure
about intraday?
out what kind of trader you want to be. I'm sorry, Shazia. Do you mind repeating your
Intraday. I
question?
just because intraday and day trading, is there a difference between the two?
They're the same. They're the same. Intraday is, what is intraday? Intra is in between the day, right? And then day is day. Intraday is, which is probably our trading session. What we talk about is New York session, right? 9 a.m. Eastern to 4:30 p.m. Eastern. So day trading and intraday are the same. They are not different. They are the same.
Thank you.
Uh, so this should be, again, you have to understand. You gotta understand types of trade. What type of trading you would like to do? Would you like to be a scalper, day trader, or a swing trader? My advice would be, anybody who's doing a 9 to 5, be a swing trader. Anybody who wants to transition to a full-time trading, get into day trading. Avoid scalping, because you will have to place n number of positions just to make small chunk of amount by the end of the day. Uh, So as somebody who's doing a 9 to 5, somebody who's working, get into swing trading so you can capture majority of the movement. And as somebody who wants to do this as a full-time, get into day trading, plus be a swing trader. It's not harmful to just do day trade. Be in the markets where you know that you will make money in the long term. That is with swing trading and day trading. And that brings us back to the execution is focus on the strategy that works. For me, what really works is breakouts and retests. And we have discussed this. We have discussed breakouts and retests as well in I think in session number 2 or 3, is wait for the price to create an impulse, then a correction, and then your entry would be capture the next impulse going up. Follow the trend, follow the direction of the market, follow the impulse going up. You don't have to trade the corrections, right? Meaning, these are my levels, by the way. This is what I marked on gold, is that when the markets are going up, I'll go on the 4 hours. So we do have a better understanding. When the markets are going up, if you miss the initial move up, it's okay. Let the markets correct so you can capture the next initial move up, right? Let the markets correct. So this is where you gotta wait. This is where you gotta wait. You gotta wait here because the direction of the market direction for gold has changed from bearish to bullish. It has completely changed from bearish to bullish. Now the markets are bullish. Gold is currently bullish now. I'm not sure what happened to this, but I'll bring my cursor up again. Gold is currently bullish, right? Because it broke the previous lower high. Look at trends. It broke the previous lower high. This is a correction now. So what capture the impulse. If you miss this first impulse, wait for a correction and capture the next impulse. As I mentioned, trading is 80% waiting. 80% waiting, 20% execution. So your execution is not going to come in between. Your execution is going to come here at the bottom. When the price creates or gives you an indication that, hey, we are now at the bottom. We have now formed a floor. We have formed a support. We're going to now continue pushing up. We will now continue pushing. This is what the system is. The system is you get paid to wait, wait for your system. Look at the trends. Look at the direction of the market. Trends, direction of the market. And trade with more structure. Trade with the structure of fundamentals. Your fundamental structure will be look at news. This is your structure now, and this is your structure to, again, we have discussed everything in detail, but this is just your structure. If you want to note it down in short, is structure is going to be in the morning when you wake up, look at the fundamentals. Look what the fundamentals say. News would be Forex Factory and financial news. Then look at technicals, right? Go to charts, identify the trend, identify the direction of the market. Where are the markets headed? Identify the direction of the markets, if the markets are going up or down, right? Mark your zones. Mark your support and resistance. Mark your support and resistance zones. See where the buyers and sellers are. See where the buyers and sellers are being rejected, where the buyers and sellers are being accepted. And then comes psychology. How do you feel today? Right? How do you feel today? Are you feeling anxious before the market gets opened? Are you feeling if you're feeling anxious, go back, take a step back, meditate. Take a step back, focus on your mind, focus on deep breathing, focus on mindful exercises, and then come back to the charts. And if you still feel the same, do not trade for the day because you are getting paid to wait. You're not getting paid to place, buy, and sell. You're getting paid to wait. So if you feel that you're not ready for the day, do not trade for the day. And I have had those days as well where I'm not ready to trade and I just step away from the screen and I do something else. I have had those days. 8 years in the markets, I still feel that there are few days that I'm not ready to trade. There are still days. And it's okay. It's okay to embrace those days and go back and look at why do you feel this way? Ask yourself, why do you feel this way? Why do you not feel ready to trade? Is it because you have something something else on your mind? Is it because the markets do not look appealing to you? Is it because the markets are very confusing? Ask these questions. Asking these questions will bring clarity into your life as well as trading. This is what it is. Any questions, folks? I'm going to open the chat box if there's anything.
No, clear.
Isa says not scared. Sh- Correct.
Terrified.
When you take the yep, it's because you're over risking. It's because there's always a fear of, when you over risk, it's always you get terrified or you get scared. It's mainly because of over risking. And this is what I have felt as well, Isa, is that when I over risk, I even if I go, let's say $200 in drawdown, I exit because I know that now if I lose, I may lose $1,000, which is 10% of my account balance, for example. If I have $10,000, I'm gonna lose 10% because I over risked, thinking that I can make $3,000, I can make 30% in one trade. So it all comes down to psychology. All the strategies work. None of the strategies are bad. All strategies are good. Psychologically, it is very important to stay intact with fundamentals and technicals. Anybody would like to add anything, folks?
I think it's just we need to stop thinking and just start doing. And once you start doing, the fear then drops, and gradually you start building self-belief and confidence.
Absolutely. And this is going to be everyone's homework up until we start the other series of four is ask these questions to yourself. Think from a more psychological point of view rather than technicals and fundamentals, because your mindset is everything. Mindset is everything. And this is why I'm also going to join the 8th of July call, Mindset Matters, because I would love to, again, take one step ahead and improve my mindset as well in terms of trading. And I feel these calls are really good to help you understand not just trading, but the entire aspect of life.
And we've got a question, what about back testing your setup?
Said says, what about backtesting your setup? You could definitely backtest, Said, but I always encourage people to forward test because when you backtest, you don't know what the fundamentals are going to be. What if you backtest a month ago? Do you know what the fundamentals were a month ago? You'll have to go back on Forex Factory Financial Juice and keep scrolling, hey, what the fundamentals were. And you already have the data. So my advice, and this is what I have done, is start forward testing. Forward testing is start live testing. Test when the markets are live because markets are very dynamic. Markets are really dynamic. So your output will also change. When you back test, you already know the data. You know what has happened previously. But when you forward test, you know what's gonna do you know what's gonna happen next? You have no idea, right? So it's more like an exam for you. That every time when I'm in the markets, it's like I'm giving an exam every day for the next 3 hours. Right? I have to always assume what's going to happen next. Again, that's by doing technicals and fundamentals. Start forward testing. When you forward test, you understand a lot more because now you have technicals, everything is live. When you back test, everything is history, right? So, forward testing has helped me better, much, much, much better than back testing.
And he's
Well,
written, I found confidence in my setup because of back testing.
one
That's
uh,
good.
one ad- one advice I'd like to share, Krishak, is don't trade with more than you can afford to lose. People
Absolutely.
put in way too much funds into, especially at the beginning. I got to pay for this month's rent or I got to pay for my car bill. No, don't rely on paying your rent or your car bill while trading with Forex. Remember, especially for the beginners, we're learning. I started learning with Krishak last year, and I'm still a beginning student. It's a skill that develops time, dedication, focus, and energy. So and even at Krishak's level, he could attest that he's always a student of learning because there's always room for improvement, no matter how many years you've been doing this. So Start small, learn, know that there's going to be a learning curve, and take your time, enjoy it, and have fun with it. And it's a new skill that you can have in your pocket as you continue to develop more and more skills as you grow. And we'll talk about skills during mindset. So thank you, Krishak. Thank you, Shazia.
Thank you, everybody.
Appreciate it, sir. Thanks everybody for being on the call. And I'll just add one quick thing is of trade with what you can lose. Trade with what you can afford to lose is what I would say. And never rely on payments. Again, when we talk about trading, never rely on trading for your payments, as what sir said is trading is you're still in a learning stage, and I always believe that I'm still a student. 8 years in the market, 7, 8 years in the markets. I'm still doing my courses. I'm still taking certification examinations still. It's trading is all about learning. It's all about upgrading yourself because every day something or the new comes up, and markets are very dynamic. So we have to be with the markets. We have to be up to date with how the markets are moving. And that being said, thank you everybody for being on the call. We'll soon have the series of four again. Um, yep.
If anybody is interested in a bit more personalized group sessions, one-to-one, then just reach out to us because they do make a difference as well. And I guess, Krishak, to close, when you said that we keep learning, even I'm learning. I was away for a few weeks. We're learning all the time. And that's it. Learning enables you to keep on growing. If you don't learn, you become redundant in terms of your skill set. It doesn't matter what field you're in, and you've got to keep up to date. You've got to keep yourself going, motivated, and that brings us to the end of today's call. Thank you everybody for joining, and keep watching out on socials. We'll be posting out when next you get the opportunity to learn to trade with Krishak. Thank you, Krishak, and everybody.
Thanks everyone. Thanks, Shazia.
Thank you. Take care. Have a good
Thanks.
evening, good
Bye-bye.
afternoon, or a morning, wherever you are.